Because Trump's Truth Social post moved faster than Iranian state media could deny it, the Dow surged 1,000 points on nothing more than a rumor of talks. That asymmetry, market belief outpacing diplomatic reality, is exactly the mechanism Citadel Securities is flagging as dangerous. Noshad Shah, head of EMEA fixed income sales at Citadel, argued this week that investors are making a structural error by treating the Iran war like a tariff, something Trump can switch off unilaterally. He can't. Unlike last year's trade disputes, any exit from this conflict requires multilateral agreement. Iranian state media flatly denied that any conversation with U.S. leaders took place, even as Trump posted the opposite on Truth Social. The rally was built on a story that one of its two parties says didn't happen. If that denial holds through the week, the 1,000-point bounce becomes a trapdoor rather than a floor. The speed of Monday's repricing shows just how thin the conviction beneath the rally was. The TSX gained 633 points, nearly 2%, while oil dropped 2%, the steepest single-day crude decline since the war began 3 weeks ago. That simultaneous move, stocks up while oil crashed, reveals the market's embedded bet that lower oil means lower inflation, which means central banks don't have to hike. It's a logical chain, but it only holds if the ceasefire is real. Palantir rose 5% on expanded Pentagon AI contract news, and travel and airline stocks surged as fuel cost repriced lower. The problem is that 90-plus oil has already rerouted global supply chains, shipping insurance repriced, Asian refiners locked into spot contract, and those structural adjustments don't reverse in a single session. A sustained drop below $85 plus would be needed before the inflation calculus meaningfully changes for the Bank of Canada or the Fed. Meanwhile, the Bank of Canada is heading into one of its most uncertain rate cycles in a decade, short two key members of its seven-person governing council. Deputy Governor Reese Mendez departs April 10, and Sharon Kazicki retires in July. Mendez led international economic analysis and G7 coordination. Kazicki owned the domestic economic outlook. Their exits are not cosmetic. The governing council makes rate decisions by consensus, and losing 28% of that council while markets are swinging 75 basis points in a single week on workup heims strips the bank of institutional continuity precisely when it needs it most. On Friday, swaps priced in 75 basis points of BoC tightening by year-end, 3 full hikes. By Monday afternoon, that had collapsed to 50 basis points as oil fell. Economist David Rosenberg called the Friday pricing beyond preposterous, given Canada's near-zero growth backdrop. The whipsaw captures the core problem: a central bank navigating an imported supply shock with a shrinking decision-making team and a market that can flip 25 basis points overnight on a single tweet. That rate uncertainty is flowing directly into energy infrastructure investment decisions, and energy is where Canada sits on a structural edge. Alberta's pipeline capacity is attracting Middle Eastern and Asian interest, according to the Alberta Premier's office, as buyers looking for non-Iranian supply scout long-term alternatives. Trans Mountain is already planning capacity additions. For investors, the causal chain runs from sustained $90-plus oil through to Canadian oil producers, unhedged, meaning they capture the full price premium, and then into the energy infrastructure suppliers who benefit from new capital commitments. NVIDIA's partnership with 6 U.S. energy giants to unlock 100 gigawatts for AI data centers adds a second demand vector for North American power assets. NextEra Energy's 10-gigawatt natural gas expansion, explicitly positioned for AI load growth, shows that the energy AI connection is now institutional capital, not speculation. Vertiv, which entered the S&P 500 this week after a 173% one-year run, embodies that infrastructure demand. The physical cooling and power systems behind every AI data center are a direct beneficiary regardless of which AI model wins. 3 mechanisms now determine whether this week's rally holds or reverses. First, whether Iran confirms or denies talks by Wednesday. Any official Iranian statement contradicting Trump collapses the peace premium embedded in oil and equities. Second, whether the Bank of Canada's Tuesday speech, now elevated to critical importance, signals any policy divergence from the Fed's rate-free stance. If Macklem hints at hikes despite Rosenberg's preposterous label, the Canadian 2-year yield rewidens and mortgage rate bets swing back hard. Third, whether NVIDIA and the AI energy build-out can sustain institutional capital flows independent of the geopolitical noise. If oil stays above $90 and the ceasefire narrative fades, the Fed rate cut thesis that's been driving tech valuations gets repriced again, and the extreme fear reading of 17 on the CNN Fear and Greed Index could get worse before it recovers.